Real estate is one of those things that you can use to maximize your salary, lower your tax burdens, and help build your nest egg. It also can be a way that helps people transition from full-time to part-time, or maybe even step away from medicine altogether. Hi, it's Michelle with the Medicine Couch, and today I'm interviewing a PA who about 5 years ago started investing in real estate. She's going to tell us what her journey has been like and share some really great information. So if you're interested in how do you do that, what are some of your options, and is it something that's feasible for you, you're going to want to stay tuned.
Hi, my name is Lauren Stewart. I am a dermatology PA. I have been practicing for 16 years, and I am also a real estate investor. I started investing in real estate in 2019, and that has been life-changing for me.
I know this is something that many PAs, NPs, MDs have been thinking about. So, why don't we start kind of by talking about your real estate journey so far, in far as what you have owned and sold along the way, and kind of where you're at now?
Sure. So we started back in 2019. We had a little bit of cash that we were looking to invest. We had sort of a couple of options. We were looking at maybe buying a long-term rental locally. We were looking at maybe just putting it in the stock market. I mean, we just were like, okay, we need to do something with this cash and invest it. But we had some friends who had a short-term rental up in Ohio, and they said, hey, we've been doing this for the last year. It's doing really well for us. Why don't you look at a short-term rental? So that sent us down the rabbit hole. We started looking all over the country. We were like, oh, we don't have to do something local. We can go anywhere. We landed on the Smokies, so Smoky Mountains. We landed in the kind of Gatlinburg, Pigeon Forge area of Tennessee. It is one of the better places for short-term rentals. It's the whole market there is short-term rentals. So there's, you never have to worry about regulations and things. And so then we found a realtor, we started looking, and we bought our first cabin at the end of 2019. Ran that for 2 years. The market went up. So we thought, well, let's use our leverage, use our equity here. So we sold it and we used the funds from that sale to buy two more. So we did what's called a 1031 exchange, where we just rolled those funds into two more properties, which keeps you from having to pay capital gains, which is great, preserves your equity. And then over the last 2 years, we sold both of those off. We sold them off for various reasons. We're now invested passively, so I'm no longer running those businesses, but the market did what the market did. We decided to take advantage of it. And so now we are part owners of an RV park in Alabama and a mobile home park in Ohio. It's been really fun. It's been a nice break from medicine for me to learn about something different. And I've really enjoyed the process.
And I bet if you would have asked yourself 5 years ago, do you see yourself owning a mobile home park in Ohio? I
Yeah.
bet that probably wasn't on
Yeah.
the top of your list.
Absolutely not.
So I'm curious, just quickly, when you kept saying that you bought that property in the end of 2019, of course, we all know what happened
Yeah.
in 2020. Were you guys able to get through that okay financially, or did you have tenants at all, or were you having to make those payments during that time?
We closed November of 2019. So we had Thanksgiving booked, we had Christmas booked. So we started out, positively cash flowing. We're like, man, this is easy. We're nailing it. And we had put a good amount down, and, we really thought we were safe. And then March of 2020, we were actually in the cabin. It was my sister's 40th birthday. So I had taken her and some friends up there. I was at the cabin and the whole country shut down. Like, I didn't even know if we were going to be able to fly home. I mean, that's the situation we were in. And so I watched my mostly full calendar for 2020. Most of the year had already booked up. We were like, we're in great shape. And I watched the entire calendar just get fully wiped out. Every single reservation canceled one by one by one by one. And all of a sudden we had zero revenue on the books. And we thought, I don't know what we're going to do. We were able to get an EIDL loan. So the small business loans that were going out, we were able to take a little bit from that just to keep us afloat. And then so we didn't have any bookings in March because I was there the first week and then it was gone. I don't think we had any bookings in April. Then about May, the tide started to turn. And first we had friends that went because they were like, we're losing our minds. Can we go to your cabin for 2 weeks? So I was like, sure. They paid the mortgage that month. I was like, fantastic. And then people started booking. And then the next thing I know, because it changed how people were vacationing, and now people weren't going to hotels, and we had a 5-bedroom cabin. So all of a sudden it was like, oh, now everybody's rates are going up. People are booking, and my whole summer fully booked. And I like basically had a like week minimum where it was like how they do in Florida, like a Saturday to
Right.
Saturday kind of a situation. So almost the entire summer ended up fully booked, and it turned back around pretty fast. But there was
That's great.
definitely a little bit of panic for about 3 months, and then it came up. And then that drove the short-term rental market or the real estate market up because
Hmm.
all of a sudden these were hotspots, and the Smokies had record numbers of visitors in 2020, 2021, 2022. I think it's come down a little bit since then, but
Yeah.
that really
I
drove
guess that makes
the market
sense.
up.
Yeah, places people could go in their cars and drive around and be outside and
Yes.
see beauty, but not have to be around a ton of
Mhm.
people like going to Disney World or something like that. So,
Yes. Yeah. It's
yeah,
drivable from like almost half of the country. It's within a day's drive. The Smoky Mountains are. And it's out, you're outside, you're in a national park. The national park is free there. You
right.
can stay in a cabin secluded. So it was like really the perfect post-COVID trip. So it was a really terrifying experience that ended up being really good for us on the financial
Yeah.
side in the long run.
But it does emphasize that when you're doing real estate and rentals, but particularly especially short-term rentals, you are subject to market fluctuations and whatever happens
Yes.
and affects that, just like any investment. So people have to keep that in mind when they're looking at this. But it sounds like overall, you guys have been having positive cash flow, and it was a good investment for you.
Yeah, I think it's hard to say because the money's been kind of rolled into other investments, but at some point I did the calculation, and that initial kind of $100,000 investment that we started with ended up growing to like almost $1.5 million at some point. So it's kind of imaginary money because it's all tied up in properties. So we've
Right.
never seen the money. I'm like, it's out there somewhere. Hopefully it comes back to us. But that investment, obviously, that's a huge growth factor in just 4 years. So that was really life changing for us of just like knowing, okay, we have this whole other income source to fall back on where it's not solely dependent on my W-2 income and saving enough in my IRA to make it. I have this whole other side now that is kind of there and growing.
I know a lot of people who probably thought about real estate have thought about short-term rentals, and maybe you can give a little definition of what qualifies like short-term rentals versus long-term rentals.
Yeah, I think each one has its own kind of pros and cons. As far as talking about short term versus long term versus some of these, like RV parks are more passive investments. The upside for a short term rental are the tax benefits. So, especially if you can manage it yourself, there's something called the short term rental loophole that allows you to materially participate in the investment where you are then gaining some status. It's not the same as being a real estate professional, but there's a lower barrier of entry there where you're actively participating, and that allows you to use any losses against your W-2 income. And so then you're like, well, if you're losing money, why are you doing it? Well, you're not. We had positive cash flow the whole time that we had these short-term rentals, but you can do cost segregation studies, and you're using depreciation to offset that cash flow. And then you can use that to offset your W-2 income. So there's a lot of tax benefits in doing short-term rentals. And there are Facebook groups that are just completely dedicated to this. So if somebody is like, hey, I'm in medicine, I make a lot of money and I pay a lot of taxes, and they are looking for the tax benefits, there are whole Facebook groups about tax benefits for real estate professionals and for medical people even. Like I love the White Coat Investor group. That's a great option. And there's lots of spinoffs from that. So that's kind of the good of the short-term rental. The downside is that you have to manage it to take advantage of the majority of those tax benefits. So that meant I had to learn how to manage a property that was 13 hours away from me,
Yeah.
which is a lot of work. Thankfully, I work part-time, so I had the time to be able to manage it. But that's everything from coordinating the cleaners, talking to the guests, being there for problems, going and visiting to make sure that everything stays organized and clean, and checking on things, making sure the maintenance is done. So I had to learn really fast. Again, Facebook groups are amazing for that. I joined both local groups and just short-term rental groups. I learned everything there was to learn about it, and I made it a very successful business. So the kind of pros and cons there are you have way more tax benefits from a short-term rental, but it's also not in any way passive. So it is Definitely not free money. And whenever people are like, oh, passive income, I'm like, this is not passive. This is active. It's another job. You've got to be willing to put in the work. A long-term rental is a lot more passive. So you're not going to have as many tax benefits, but you have somebody else paying your mortgage. That property hopefully is going to appreciate over time. So it's a longer, slower play there. And so there's, pros and cons of that too.
So when we're talking about short term versus long term, I guess one thing to consider is if your property is in a strong rental market for short term rentals and you're getting lots of bookings, then you have the potential to make way more than your
Mm,
mortgage every month, right? So that
yes.
gives you that positive cash flow, but you're very dependent on what the market does and what happens in the world, and then it's all that on hand management that you have to do, that time you have to spend taking care of all that. Whereas you're saying with a long-term rental, you're probably, or you should have it priced that your mortgage and taxes are being taken care of. So basically, it shouldn't really cost you anything, but are you getting any positive cash flow, or is that pretty much a break even situation? And then you're just hoping for return on investment once you sell the property in the long run?
I think right now in today's market, most of the long-term rental situations are going to be a break even because we have interest rates at almost 7% still. So that means everyone's mortgages are higher and it makes it more difficult to make money on both sides. But especially for long-term rentals, your margins are going to be smaller. But that doesn't mean it's a bad investment. The appreciation may be worth it. I mean, at least in my area, all of our homes have basically doubled in value over the last 7, 8 years. So it's been
Yeah.
obviously profitable to own real estate, but it really kind of depends on the market. Now some places you can get a really good deal if you buy a foreclosure or you buy something that needs a little bit of work. You may be able to have some positive cash flow right out of the gate, but right now with the mortgage interest rates, unless you're buying in cash, I think you're going to struggle to have a lot of cash flow on a long-term rental.
And then I think you were heading into then talking about some of the other options for real estate.
Yeah, so RV parks are a whole other kind of beast. They are recession proof, so there is a lot there. Same with mobile home parks. As the economy gets worse, and sometimes these get better because both RV parks and mobile home parks are used for RV parks are sometimes short term, sometimes long term. But when times are bad, RV parks oftentimes will be more of a long term place for people to stay. And so they're a little bit more recession proof, and we're not buying these outright and running them ourselves. So we're doing this as part of a company that's called a syndication. So with a syndication, you're kind of giving your money to somebody who's running it and you're investing in it. Our case is a little bit different because we did a 1031, so we're technically a tenants in common. But in a lot of these cases, you can invest passively you're not taking out the loan, you're not a sole owner, they're managing it. You're just giving money to the investment. And then there are structured deals where you have like a 7% preferred return. And then eventually, when they sell that property, you will get a part of that return, that profit.
Are you getting monthly income? And then when you sell it, that's when you get the big profit, or
Right.
hopefully that's when you get the big return.
Right. So usually there is a smaller amount of cash flow with these types of deals where you are getting distributions and then you'll get the bigger payoff when they sell that property. A lot of these deals are set up to be like a 3 to 5, and the mobile home park is actually set up to be a 10-year hold. So it's a longer hold, but we're getting distributions from that. And then at some point, they'll kind of do a cash out refinance and we'll get a bigger distribution, which is great because that's a tax-free cash out refinance doesn't incur any taxes. So we'll get a big chunk of our investment back without paying taxes on it. And we won't have an actual capital gains tax bill on that until the property sells.
And that's all hands off because other people are managing it and stuff. You're just being an investor in it. Right?
Yes,
Yeah,
yes,
that's interesting. Yeah.
that's all truly passive, the ones that we're in now.
And how did you like go about finding out about all of this stuff? I mean, I take it you weren't like a real estate mogul when you started this and knew
Right.
all this
Yeah.
stuff.
A couple of ways. I mean, again, some of the Facebook groups were helpful for some of that. I actually got started in the syndication piece just completely by chance. I was flying out to one of the properties in the Smokies to get it set up that we had just bought. And I sat next to this guy on the plane and we were talking, and he was flying out to do some like ultra marathon in the woods. I don't know. I'm like, I mean, I like almost put my headphones on and be like, you're crazy. I'm not, like who runs like, a marathon in the woods? It was like an unmarked trail. I'm like, you're insane.
Right.
But we kept talking and I said, oh, I'm flying out to this property. And he's like, oh, I have a rental in Florida. And we started talking about real estate. And he's like, yeah, I've really rolled almost all my stuff into mailbox money. And I was like, what? Mailbox money? I was like, what's
Yeah.
mailbox
I want
money?
some of that.
Yeah, how do I get in on the mailbox money? And he's like, oh, these are syndications or passive deals where I invest the money and then I just get a check in the mail. And I'm like, oh, well, that sounds great. So he gave me some information about it. We exchanged numbers just to catch up on real estate. He actually lives right around the corner from me. So we're all friends
Oh,
now. But
interesting.
we became friends and then his family. And then we started talking more about that. And then I had two other Facebook acquaintances who had both invested in the Smokies the same time that I did. And we all landed in the same situation a few years later where we're like, okay, what do we do now? Because these homes are worth a lot more than what we paid for them. We're kind of tired of running them. Should we sell them, capitalize on the investment gain here, and then do something else? And then what are we going to do? So we started talking. We kind of joined forces with Plain Guy, who we kind of created our own little mastermind group. And so we started just helping each other. And so the four of us have been talking about real estate for, the last 3 years and learning together. And so, I kind of tell people, I'm like, if you want to learn about anything in life, find somebody who's a little bit ahead of you and then say,
Mhm.
can you help me? How did you get to
Yeah.
where you are? What do I need to do? And then, just be humble enough to ask for help. And that's all you have to do. You don't have to know all the answers. It's okay to say, I have no idea what I'm doing. Help me. Because most people are willing to help. I have helped so many people after me, and I've gotten so much help from others. And it just takes a little bit of humility to say, I love what you're doing. Help me get there. And so that's kind of how we formed our group. And that, we're all invested in a lot of deals together now. And it helps us kind of evaluate new deals and what we want to do next.
What was it called if you wanted to search for those kind of things? Like, what would people search?
Some of the Facebook groups are like the White Coat Investor Group is a good, just kind of general financial advice group. There are short-term rental groups. Alex Sabio has one that's like a healthcare. It's like I can find the name for you. I can link it for you. But there's a
Okay,
Facebook
yeah,
group
that's fine.
about short-term rentals for healthcare workers, and so there's different people that have different groups. So I mean, it really depends on what type of investment you're wanting to do.
But what did you call that? The people that do where you invest in the mobile home parks and stuff like that in
Oh,
your what's that called again?
they're called syndications.
Like real estate syndications
Real
or
estate syndications. And
okay.
a lot of the syndications are like apartment complexes and things like that. So, which we have some invested. They're not without risk. There is a barrier of entry for some of that. To invest in a lot of the syndications, you need to be either have a net worth of over $1 million or an income of over, I think it's like 250 or $300,000 a year. So you have to be, there's a term for that. It's like a qualified investor. There's something that you have to be to get into those.
And are these RITs or RTIs where you just own like little small bits and I don't even know how much ownership you really have.
Those are more set up kind of like a mutual fund. Those are a little bit different. So similar but different. When you're using a syndication, you become a limited partner versus with the REITs, you're like more or less investing into a fund.
Okay. Yeah, that makes sense. One thing I kind of wanted to circle back to when we talked about the short-term rentals, and you talked about that Smoky Mountains is a great area because there's a predominance of short-term rentals, and
Mhm.
so the city ordinances and things are favorable to that. But do you have concerns, or have you seen people in the groups you're in having concerns and or actual problems with any changing laws or ordinances regarding short-term rentals? Because I know a lot of places are really starting to want them, try to push them out.
Yeah, I definitely have concerns for that. And I would be very hesitant to invest in an area that didn't already have laws in place because you could find yourself in a situation where it makes sense as a short term rental. And then short term rentals get banned, and maybe it doesn't make sense as a long term rental and you're losing money. So I would encourage people, if they're interested in that, to get on like AirDNA, which is a website that helps you figure out, it's through Airbnb, helps you figure out occupancy rates, average daily rental amounts. And then you can kind of see, because ideally you want to be in a place that has year-round rentals and also a high nightly amount, right? That's going to bring you the most cash flow. So it can help you kind of target those markets where you could be more profitable.
I've always thought about short-term rentals near hospitals and
Mhm.
also near like PA and medical schools stuff because we all know. And of course, I work locums a lot, and I've stayed in Airbnbs and different properties near hospitals and things. I've always thought that's kind of a built-in market, and most of those people are already vetted and people you're probably
Mhm.
not going to have any problems with. I don't know if you've
Mhm.
ever thought about that or know anybody that's doing that or focusing on that market.
Yeah, I do know some people. There's a website that are generally going to be more what are called midterm rentals, which are longer than short-term rentals, which are 7 days or less, but shorter than long-term rentals, which are 30 days or more. So the midterm rental market, there's a website specifically for healthcare professionals for that. So I definitely see people that are in that field. You can really target your rental to cater to those clients, and I think that's a great avenue where you could potentially make some good money there, and you're
Yeah.
you're kind of in between the two.
Yeah, and if you have a PA school, a medical school near you, you can get in with them and the people that run it and
Mhm.
let them know that you have, good properties that they could pass along to their students. So what about people that may be watching this who make a good income and have a little bit of savings, but they don't have like a big chunk of cash to invest? Is it still possible for them to take advantage of some of these opportunities?
Yeah, absolutely. There's something called a DSCR loan, which is provides a loan for a property based on the property's income potential. So that is an avenue that I think not a lot of people know about. So if you don't, for instance, have a good debt to income ratio where you have difficulty securing the loan, or you don't have a lot of cash to put down, you can do a DSCR loan where the bank is gonna look at the income potential of the property that you're buying and allow you to use that income as the income to pay for the property. The rules are different with that. So you have to work with somebody, a loan officer who understands the terms and can help you. But there's a lot of ways to do that. So one of the things I think is a really good option for people, maybe PAs or NPs or people who are just out of school and they're looking for a place to live or they're looking for an investment property, you could buy a duplex that way. You could rent out both sides initially. You could live in one side, rent out the other. And that is kind of a workaround that you could do. You could rent it out for several years and then you could live in it for several years and then sell, which if it becomes your primary, then you can eliminate the capital gains tax because your primary home has a exemption. So there's some really neat ways that you can kind of get into it early. And I always encourage people, the earlier you can get in the market, the better. I think we've all seen in the last 5 years how people who are not currently in the real estate market are really struggling to get in now. The market took
Mhm.
off without them, and now it's really hard to get in. That won't be forever. The rates will come down. There'll be more opportunities to get in, but the earlier you get in, the better you're going to be off.
And I've seen some people recently predicting kind of a little bit of a market correction or crash, whatever you want to call it, where they anticipate, especially in certain markets, the real estate kind of coming back down for a while. Everything's cyclical, right,
Mhm.
in
Mhm.
the economy. So if you're thinking about this, maybe it's a good time to start learning and getting ready so that you can move when the time is right for you. So I was thinking when you were talking about that DSCR loan, I know I had a couple years ago tried to buy some real estate property as more of investment things, but I was working 1099 and I do that a lot since I
Mhm.
work locums. And even though my credit and the down payment and the price of the home I was looking at, everything was fine. It's just that, especially through having gone through COVID, the banks were not wanting to lend on 1099 income.
Mhm.
So could this loan help kind of circumvent that problem, or is that a way around it if you are a 1099 earner?
Yeah, absolutely. That's a great opportunity to use that because they're really looking at the property itself versus looking at you and your income. So that's a really good way to kind of work around it if you are 1099 and you don't have that W-2. And even if you have W-2 income, the banks want 2 years minimum. I mean, there's debt to income ratios that come into play there. So it's not as easy as people would think.
Which is kind of what's surprising for me, I would say,
Mhm.
because I know people buy homes all the time, and I thought I make good money, I have great credit. I just was completely floored that 1099 income would
Mhm.
be a problem. And I talked to two different loan companies, and neither of them mentioned anything else other than just a normal home
Mhm.
loan. And these were properties that had a potential rental unit with it. So good to know. And another important lesson about why we need to do our own
Mhm.
learning, right? And digging into things and understanding what the possibilities are. You kind of touched on it earlier about having something else that you're doing.
Mhm.
Why do you think it's important for people, especially people who work in medicine, to think about real estate or having some kind of, exit strategy or something else to rely on other than their medical income?
I think there's two, at least for myself, there's two big drivers here. One is we tend to be very driven people who have a desire to continually learn. So it gave me an opportunity to learn something different and new. And so it kind of filled some of that creativity side for me and the entrepreneur drive. So I think there's a lot of people in medicine who do have some of that entrepreneur drive and they don't want to just work for somebody else the rest of their lives. But as PAs, we're sort of limited. Some people are, but most people are not opening their own practices. There's barriers there and legislation against us there. So, it gives you the opportunity to build something on your own. And then the other piece of that for me was I don't necessarily want to have to depend on medicine the rest of my life. So I want to have an exit strategy. I want to have another avenue if I do get burnout or if I just need to take a few years off. I need to have another
Yeah.
source of income. And I need to have a source of income that isn't me trading my time for money. Medicine is one of those few places where you really are very tied to trading your time for money. It's very
Yeah.
difficult to trade anything but your time for money in medicine. So, being able to use your knowledge and your skill set and your intelligence, right? Most medical professionals are highly intelligent driven people. So, if there's something else you want to learn, I fully believe you can go out there and learn it and be successful.
Yeah.
Just like you said,
Yeah.
anything you want to learn is on the internet. The world is your oyster. So, find something,
Right.
pursue it. You're going to do fine. You're going to do fine. So, that's the big piece for me. Is like, okay, can I start building some passive income here that is going to allow me to maybe retire early, maybe cut back my hours where I'm working part time. That's what I'm doing now. I'm working part time, take a few years off, travel if I want to, be home when I have
Right.
young kids, whatever your motivation is there, giving you a little bit more freedom of time through the real estate side.
Yeah, I think it's so important. You never know what's going to happen in life, your health wise, your family health, environmental stuff that can take away, like you said, your ability to trade your time for money. And so
Mm,
having something set up is always a great insurance policy and just something that can keep you from being devastated if something
mm.
happens. Anything else, Lauren, that you want to say about real estate, about finances, or just thinking about this in general?
I just really want to encourage, your listeners, especially the younger ones. I mean, it applies to all of us, but especially to the younger ones getting out of school. And, we come out of school usually with a lot of debt, just to really prioritize your financial well-being, getting those loans paid off early, house hacking, which if you're familiar with that term, that's when you buy a property or rent a property and then share it with other people. When I graduated PA school, I bought a four-bedroom house and then I rented out three of the bedrooms and I lived for free for a couple of years until I got married. And so they
Right.
paid my mortgage and my utilities and I was able to pay off my student loans during that time. All my income went to the student loans and I lived like, White Coat Investor has the phrase live like a resident, right? Like you live on rice and beans,
Right.
You keep your cost of living as low as you possibly can. Even though you're making good money, you don't want to elevate your lifestyle until you get all the debt paid off and you get your finances in order. And I really want to stress to people how important it is to do that early. Doing things like investing in a Roth IRA or getting your 401k match at work. The earlier you invest in those retirement accounts, the better off you're going to be in the long run. Really, just because of compounded interest, right? The time in the market is more important than timing the market, right? The earlier you get in, the better off you're going to be. And so I think it's another area that, at least for me in PA school, I got zero education on the finance side. And
Right.
I mean, you send people out there in the world to a six-figure job and a lot of debt
Yeah.
with like zero like information on like, hey, don't go
Right.
buy a new car with your first job paycheck. We really should be doing better for our students on just basics of finance and how to handle your money and getting ahead. Because really, all PAs, should be doing okay, right? Like we're
Right.
making good money. We should have the skills to be able to grow that, but it does take some time. Yeah.
It's so understandable to come out of school when you've been a student most of your life, whatever, and you come out and now you're making like this six-figure income and you think, I have worked hard, I deserve good things in life. And some people may have the attitude, well, I'm going to do that for a little bit and,
Hmm.
enjoy things as I start my first year working, and then I will start the investing and things.
Hmm.
But I think the problem is that once you start getting used to a lifestyle, once you've elevated your lifestyle from student to somebody who makes six figures, and you start indulging those things, it is the rare person who can then turn around and
Hmm.
scale back their
Yep.
lifestyle, especially at a younger age, so that they can invest in the future. Like you're
Hmm.
saying, if you just do it soon when you come out and have that mentality that you're still living on much less than what you could and get things set up, then the lifestyle will come and then you'll be able to enjoy it for many more years
Right.
to come, and even a better lifestyle. So great points that you bring up there. Well, thank you, Lauren. This has really been educational.
Thank you for having me. I really enjoyed it.
If you are somebody who's looking for non-clinical roles or something that you can do to replace your PA income, and you don't have to be in the clinic anymore, then you might want to check out this playlist here. It is all of the interviews I have done with PAs who have moved into non-clinical roles. There are lots of opportunities out there. Thanks for joining me. And as always, take care, stay sane, and I'll see you next time on the Medicine Couch. Bye.